Hope everyone is well. Again, getting used to having these later on in the evening. Quite enjoying having the breakdowns at a certain point that the market has done its movement, and all we're doing is forecasting for the next day. So I'm going to keep it short and sweet. I know the last couple were quite long in terms of the amount of info that we was covering, but really I just wanted to cover the main key cryptos and then also the main key stocks as well. And then if there's anything else that I think could be of value, I will add it in there also. So as we can see, just here we're on the Bitcoin 4-hourly chart just here. We did have before what looked like a lower low, but what we've found is today is that actually we've got a higher high. So very bullish, guys. I mean, there's not really much more I can say about that. It's bullish. I think we've got what looks here to be like an ascending wedge, which is bearish, which kind of, let's say, evens the two out. But I think we are going to come up here and test this line just here before seeing that dump, because I think one of the things, and this is certainly some of the things that I was going to mention towards the end of this, but I'm going to mention it just now just to make everyone aware of what is going on with the economy. So currently, as we see across the board, FED, Bank of England, various different banks in Europe, there's a lot of money getting printed to facilitate the debt and also the lacking jobs basically for the people, so that there's been a shortfall in income of which they're trying to plug up as banks and to keep the economy afloat. So again, there's the dollars getting put into circulation, which is again in essence propping people up. But again, this is making huge inflation long term. Now, I actually watched a video earlier today around the economy and how it sort of fits into cryptocurrency, and how, bear with me guys, I'm going to get to the point in a minute, but and how the printing of the money needs to be balanced with the amount of money that's actually coming in as income and getting spent, which, as going through recession and depression, it isn't. It's about balancing the two, so the debt versus the income. So what we found is that the FED, see, there's something called stable coin, which I'm going to cover in subsequent lessons, which is basically the equivalent of a cryptocurrency dollar. They say it's backed up by the dollar, but you never really know nowadays. And I think there's been a lot of certain things that are getting done by the FED that is actually manipulating this digital dollar, the US tether. There's been a lot getting printed to sustain the $1 value of this coin, because when I'm not trading Bitcoin, Euro, XRP, Euro, and ETH, Euro, I'll trade with Bitcoin Tether. So the price is meant to be stable. So what you find is if you're trading Bitcoin, Euro, if you're trading Bitcoin to XRP, then you don't really know what they're so volatile. It's both assets that you've got no real stability. So US Tether was created so that you was dealing with, in essence, dollars, and then you could transfer one into a more stable asset, hence the stable coin. But what's happening as we speak is the FED and other parties that own Tether as a stable coin are printing and putting more Tether into circulation. Now, that money is going, well, it's going to go in one direction, and that's towards Bitcoin, which is why I'm thinking that we've seen such a bullish run with regards to Bitcoin's price. Now, as we know, with the dollar, with anything that's been put into a big bubble and propped up, it is going to go boom at some point, guys. Now, I would love it to surpass this level just here, because then we're in for a party and we're going to be looking at the all-time highs. But I think until we do that, I am holding my breath. And I think we are going to test this level. And I have mentioned it the last couple of days. We're going to test this level. And from there, when the tether, let's say, rush or the bubble bursts, we are going to come down and test these lower levels. And I see it as a sale. It's a time to accumulate more of these assets to serve as a great purpose in the future. So that's really my views on Bitcoin. I do think over the next few days, apologies, we are going to break out of this either wedge to the downside and test to the bottom of here of support, or break out, unconfirm this wedge and retest up here before breaking down to the downside. If we do break up again, then it's joyous all around. So moving on to XRP and Euro, we are still trading within this long-term wedge just here. So what looks to be happening is we're actually trading more of a channel within that wedge just here. So really, until we see a breakout of either side, it'll be unconfirmed as to what's going to happen. But my guess, with Bitcoin probably breaking out and retesting to the top, we are going to see this line tested here. If we do break that, then we are going to be looking at highs and maybe perhaps testing this level just here and testing the wider wedge level. But I do think what's going to happen is we're going to break out just here. We're going to see some sideways consolidation before moving in to the end of the month, which would close, and then getting an ultimatum as to whether we are going to break out to the upside or to the downside. Now, I don't have a time span on when Bitcoin and Euro is going to, let's say, implode and move to the downside due to Tether and the bubble. But what I do know is that when it does happen, it's going to affect these two assets massively. So really, for us at the moment, it's just about trading what we can within these levels. So I think we've definitely broke through this level just here, and we may come down, break out this, test this as support and move up, or we may break out, test this as resistance, and then move down to the downside, trying to test this support and maybe break through and use this level of support just here, according to this prior level of support just here, this ascending support. So there's really a lot of things that could be happening with the market right now, guys. If you are trading within this, I'd be very sensible and either wait for a breakout or just wait for a line test and then trade within the channel. I would say that would be a safer bet for the leverage, guys. So 1, 2, we're looking for a third touch. So if you entered around here, we could have that third touch, or 1, 2, 3. If we broke out, then you at least you'd have your stop loss there, but you could have your long opportunity there, just where you enter your long, you'd have your stop loss. I'll put a demonstration in. See, very simple. Enter there. We're looking at the upside target. This is for the leverage guys who would be looking for more of a 5% move at the most, really. You know, you enter around here, and then you have your stop loss out here in case we do break out of this, it'll cash you out. So that's really how you do it, and you risk manage properly, and you want to trade inside of the channel. Then go ahead and leverage your heart out, but I would not recommend it for new traders, guys. So I think, again, if we break out of here, we are going to see an upside test of this level just here, but we are all at the mercy at Bitcoin's expense at the moment. But moving on to Ether, they have actually shown some brutally gorgeous bullish momentum today. So as we can see here, we broke out of this and mentioned this a couple of days ago, and we've seen a very similar thing here about the channel. We broke out this channel just here, may come down right down to here to retest this level like this, which I would imagine we will do, and prepare for the greater highs, guys. And I think long term we are going to see again what I mentioned. If we break through this level, then beautiful, we'll move up to here. But I think the similar thing is going to happen with Bitcoin, with Ether, and with XRP, guys. So what we're going to be having is test up, breakdown, absolutely dump, guys. So that is my opinion on where we are looking with the market. We are looking at absolutely nice and bullish, to be honest, for Ether. To say things were all doom and gloom a few days ago, I think we have found a bit of intermediate, well, breakout slash, if we do find support, it'd be nice for a move higher. But I'm just still a tiny bit cautious with the market. If we form a new channel just here, then beautiful, we can start to trade within this, or even we can trade on the breakout just like this. If we do break this level just here, we can trade here, breakout, and then expect this higher level just here. Maybe we can have some bit of resistance here, so we could put we'd enter just there. We could have, and this is all theory, guys, we could have a take profit there, and then similar thing to the top where you would have another take profit just up here, just before this institutional slash resistance level. So again, it'd be a nice 12% move up with a 3% ratio, so 3.8 risk reward, no messing, beautiful. Thank you very much. So again, if you are looking to trade for that, we'd look for the test and breakout, and then from there looking at that resistance. But again, I think we are going to be looking at definite downside movements over this next coming weeks, as such, as we see this digital dollar go for, well, it means nothing, as we see they're printing 200s of millions every single day, and I think this bubble is definitely going to be seeing some losing my word here, but yeah, it's going to struggle, put it that way. So moving on to Tilray, they have, yeah, it's been looking pretty good, to be honest. Really, it's one of my longer term higher risk investments. I haven't actually bought into this just yet because I do think we are going to break out of here, crumble down to these levels, guys. I'll buy in and then I'll keep it in. It's cannabis research, so obviously there's going to be a lot of research to be done. They do have a foot in the market, and then from there, as we get the more legislation taken away from and more real industry put around the cannabis industry, I think the guys that have a foot in the door, whether they've had a shit last couple of years or not, will be in for a big ride, guys. So that's all it is with Tilray. I'm waiting for this order just here. Similar thing with BP, we've seen a big move out today, so it's looking pretty bullish. We broke out this level and this declining support just here, which looks now actually like, so we are still seeing that declining level just here. Maybe I just needed to refine my level of resistance a tiny bit. But if we do break out of here, guys, and make a higher high, then it's looking well. But I think, as we see, we've just got to pair it with the grand scheme of things picture that we're seeing every single day. And is oil making money? No, it is not. They are currently losing money due to the amount and the running costs for the energy as a whole versus what's coming in. So pairing with that, yes, it looks bullish here, but my eyes are very much to the downside, and I have hot orders put inside here. So I think, again, when you are trading, guys, you need to look at the technicals, but in a world where we've got the fundamentals that are going on at the minute, you cannot forget them also, and they can give you further clarity when you're sat with your boxes thinking they're not going to get filled for the limit order. We're moving on to BT. So still trading within this range just here, this channel. We've got the lowering lows, and again, my buy-in is just here. So if we continue at this rate, we may break out, see a bit of test of this resistance just here, but I think ultimately if we do that, we are still going to move down to this with the current climate that we have and the lack of money in circulation versus debt, as I was mentioning earlier, around the economy. So Vodafone, a few little top picks. Trading within an ascending triangle, actually, so it looks pretty nice. If we have tested this top line. If we do break out, then I think we're going to have no problem at testing the 132 mark. Again, using the prior historic data of support and resistance. So I'm going to just show this just here. So I think we're going to have no problem just testing here according to this level just here. And again, we've got a bit of support there, resistance. So again, resistance, support, turns resistance, back up, support, turns resistance, back and send resistance until we break this. We'll be looking at this support just here. Breaking out this prior support will then be resistance just here. We break out of that, we will be looking at testing this next level just up here, which is the 140 mark, and then again we'd be trading within this, waiting for the higher highs. But ultimately, guys, I'm going to say the same thing as what I've said all this episode, is that the fundamentals are bollocks. So there we are. Moving into Aviva. So Aviva, I added this one in today because it's looking like one of my top picks for an investment. I think we are, according to prior historic data, looking like we've hit a bottom. I think we are going to hit a tiny bit more of a bottom again, according to the economic disaster. So I think we are, last time prior historic, which was the recession, guys, in 09, 153. So as we're trading now, we are trading at 241. So I think we definitely do, and I have my orders inside here. We definitely do, as we go into the depression, we are looking to fill some orders down here. If it doesn't get into here, guys, I'm not interested. I need to be looking at the better, and this range just here. If you guys are looking at Aviva, I wouldn't go in where we are currently, because you'd be looking at 2x. I'd be looking around this level, so you'd be looking at least that 3x, and then once they bring them dividends back in, we'll be looking at a juicy payment of around 4% dividends in the next 2 years, which is pretty good as far as they go with regards to Aviva. So Moving on, Salesforce, absolutely. I've not done any technical analysis on it, but it looks like it's going to be moving a tiny bit higher. I think. Just looking at that face value, I think we're I think the CRM systems. So again, it's not wholly recession proof, but I think we'll definitely be seeing some downside and then upside as we progress moving forward. So really, guys, that is everything for today. I wanted to mention around I'll go into it in the next couple of days, but my ideas around where we are with regards to the long-term and short-term debt cycles for the recessions and the depression that we could currently be going into with regards to the current economic crisis as a whole. And when I say that, I mean the long-term 70 to 100 year debt cycles that we have, which I will again go into more detail about, around the amount of debt versus the money in circulation. So the last depression that we had was in 1929, spanning the way till 1933. And again, I think on average, every 8 years they go through a recession. Again, the economy over the first 3 years is really at its bottom, then it starts to build up towards years 3 to 5, and then from 6 to 8 we generally see that recession. So every 8 years for the recession and every 75 to 100 years for the depression. So looking at prior historic data and 1929, you do the math, we are looking at what could be a depression. So not even at a recession yet, guys, because according to where we were in the recession, it was a lot worse in 2009. But the way we are going, guys, we are just at the start of the phases, and to me, it's going to be a 3-year span that will bring us into this depression, guys. So, not to leave it on a very depressive note, or depression session note, but I will catch everybody tomorrow. Peace.